Musicians know it's not just the notes, it's the silence between it that shapes the song. And in Expedia's Q1 2025 earnings call, the silence around Vrbo, it did a lot of work and told us more than you might think. Hi, I'm Yuvika Wahi from Rental Scale Up, where we help short-term rental managers make sense of the platforms they depend on. On today's video, we're taking a deep dive into Vrbo's Q1 2025 performance, or rather, what we didn't hear about it, and what that means for your business in the months ahead. Let's start with what little was said. Vrbo saw modest growth in Q1 2025. That's the one major takeaway we got from Expedia's earnings call. CFO Scott Forbes said Vrbo bookings, quote, grew in line with the market in the US. No slides, no performance breakdowns, no mention of regional performance revenue or roadmap. Growing in line with the market means Vrbo didn't shrink, but it also didn't stand out. Growth was positive but moderate. It was simply keeping pace. And that tells us something. Vrbo felt the weight of US market softness more than its competitors did. Expedia reminded investors that two-thirds of its bookings come from US points of sale, and Vrbo is especially exposed to both US and inbound international demand. That's the problem when A, domestic demand is soft, B, inbound travel to the US dropped by 7%, and also Canadian bookings to the US nearly fell 30%. Compare that to Airbnb, whose US business is mostly domestic, or Booking.com, which continues to grow internationally, especially in Europe. Vrbo, in contrast, is anchored in a part of the market that's been softening. And another just as big part of the story is how Vrbo grew. According to Expedia's leadership, nearly a third of Vrbo's Q1 growth came from multi-unit inventory added in 2024. That means urban condos, serviced apartments, and hotel-like properties, not beach houses, ski chalets, or lakeside cottages. And on top of that, shorter stays, think 2 or 3 nights, are also now driving performance. So the modest growth Vrbo did see, it didn't come from the Vrbo image we all recognize. It came from a different kind of supply, faster moving, more urban, more transactional. And that brings us to the silence. Vrbo didn't just get downplayed in the earnings call, it was nearly invisible. And that's rarely accidental. When a major brand doesn't get its own slide or any specific performance metrics, there's usually a reason. Either the numbers weren't impressive, the company didn't want to draw attention to brand level differences, or more likely, they're folding the brand into a broader platform strategy. It seems that Expedia now reports all its B2C travel platforms, which includes Vrbo, Expedia.com, and Hotels.com, as one lodging category. That gives them flexibility in how they present results and lets them soften the blow if one brand, let's say Hotels.com, is underperforming. Ariane Gorin, Expedia's CEO, even acknowledged that rolling out one key loyalty across all brands hurt Hotels.com. She said, quote, loyalty was a differentiator for Hotels.com, and once you took it away, it diluted the value a lot. So what did they do next? They started tuning loyalty by brand and geography. For Vrbo, that meant cutting back on loyalty rewards. As of April 2025, Vrbo guests in the blue tier, basically anyone not booking regularly, no longer earn any one key cash. Silver tier members earn just 1% back. Meanwhile, on Expedia.com and Hotels.com, all guests, even blue tier, continue to earn 2%. That means a guest booking the same exact property could earn more or less depending on which site they book through. And in a price-sensitive environment, that difference matters. For property managers, this could lead to maybe slightly lower conversion on Vrbo listings, perhaps a shift in bookings toward Expedia or Hotels.com as channels, and maybe even more guest questions about rewards or cancellation policies. It also tells us that Expedia doesn't expect Vrbo to be a loyalty engine. Vrbo tracks infrequent, high-value guests. Think once-a-year family vacation. From Expedia's perspective, that doesn't warrant reward spending, so Vrbo becomes more of a margin play, not a repeat booking channel. Let's go back to the brand. You've probably seen Vrbo's recent billboard campaigns. The imagery is of private homes, no hosts, space to stretch out, classic vacation vibes. But the performance is being driven by multi-unit buildings and shorter stays. So what we're seeing is a growing disconnect between Vrbo's marketing and what actually is performing well on the platform. If you manage single homes, standalone vacation properties, you may still be featured in Vrbo's marketing, but behind the scenes, you may be less of a priority than you used to be. Conversely, if you manage multi-unit or urban inventory, you might be in exactly the right place for Vrbo's next evolution. And that evolution may accelerate depending on what we see next week. Expedia's big partner event, Explore 25, is coming up. If Vrbo is going to introduce new host tools or platform features, this is when they'll do it. Here's what I think we might see. Trip matching powered by AI, which Expedia has already launched for Expedia.com, helping guests book based on inspiration from Reels or from Instagram photos. Maybe AI generated content tools for automated descriptions, better photo curation, a more streamlined onboarding or pricing tools for new hosts, and possible expansion into Latin America where guest demand is shifting, especially from Europe. But if Vrbo doesn't show up at Explore in a meaningful way, that could be a signal too. A signal that Vrbo is being gradually absorbed into the Expedia machine, not phased out, but deprioritized as a standalone platform. So, what should you do as a property manager? Well, first, don't panic. Vrbo still drives bookings, but be honest about where your growth is coming from. If you're still focused on high touch, whole home listings, and those aren't performing as well, it might be time to test new strategies. Audit your listings across Expedia's platforms, make sure your photos, copy, and rates are optimized. Consider offering your own loyalty perks for repeat guests. And above all, watch what happens at Explore 25. Because if Vrbo does reemerge with new tools and clearer directions, that's great. But if it stays quiet again, that silence may say more than any press release. Thank you for watching. Again, I'm Yuvika from Rental Scale Up, your go-to source for short-term rental news. If you found this helpful, share it with your team or your fellow managers or subscribe to our free weekly newsletter. We'll be back soon. Thank you for watching. Bye.